Hello, no mai, hoki mai. Welcome back to day one of the Financial Services Council 2020 conference, Generations. We hope you've had a relaxing break following our morning of insight, debate, challenge and inspiration. It was great to see people meeting and greeting the Tech Alley and Pitch Perfect participants at the 12:30 session sponsored by Minter Ellison Rudd Watts. And I heard great feedback from the Trustees Executives screening of The Final Countdown, Trusts Act 2019, and also Bravura's session on reshaping financial advice. Those great insights just keep coming. Thank you for joining us for the next hour, where the focus of our breakout session spans right across the sector. In the insurance breakout, we have a star-studded panel discussing how we must tackle the customer agenda. And in the Generations stream, our speakers address the incredibly important topic of well-being. In the second Laduka session of the day, guests Lou and Lucy discuss how the sector can change how to support customers affected by cancer. And over on the investment channel, the conversation is all about the behaviour of switching, so topical for 2020. Once again, in all sessions, there is the opportunity for Q&A, so ask away. Enjoy and matewa.
Good afternoon and welcome. We'll just allow a short amount of time for people to come and join the session from the main plenary, and we'll be with you in about 10 seconds. Hopefully that's enough time for everybody to join us. So welcome to this first insurance session at the FSC conference for 2020. My name is Mark Banicevich. I'm probably the least well-known person on this panel. I'm Head of Industry Engagement at Partners Life and do a lot of work with the Financial Services Council, including heading our Advisor Transition Working Group, where we're doing a lot of work to help advisors understand the changes to the new financial advice regime and prepare their businesses for it. It is my absolute pleasure to lead this panel, and I am once again very humbled. If anybody was in the Pitch Perfect breakfast this morning, you'll know that I was humbled in that session by the amazing go-getters that have done things in their lives so far that I haven't, and paled by comparison, together with a judging panel of incredible expertise. And I find myself similarly humbled in this afternoon session, where if I can introduce my panel for those of you who don't know them. First up, I'd like to introduce Clare Bollingford. Clare had 20 years at the Financial Conduct Authority and presumably the FSA before it became the FCA in the UK, including heading departments for 10 years and 2 years as a Deputy Director at Her Majesty's Treasury. I think anybody with Her Majesty's in their title somewhere has got to be well worth having on a panel. She joined the FMA in February 2020, so as much as I say I'm probably the least well-known person on the panel, many of you may not know Clare because she's been locked in her house for most of the time that she's been in New Zealand, but hopefully that'll change over the next few months. Secondly, I have Gail Costa. Gail's a Wellingtonian actually, so it's nice to have somebody who's done 18 years leading Cigna businesses across Hong Kong, Spain, UK, Turkey and New Zealand, and returned to New Zealand with all of that knowledge, now leading Cigna in New Zealand. And before that, she had 15 years at Allerston. So welcome, Gail. We have Nick Stanhope, also probably known to most people here, 21 years at ASB, from a relationship executive early in his career through to the Executive General Manager of Wealth and Insurance, and then moving on to 5 years between CEO of Sovereign and now CEO of AIA New Zealand. Although claims to be an Auckland boy, he's also done some schooling in Wellington, but another great Kiwi who spent a lot of time here leading a New Zealand business and adding a lot to the New Zealand economy, which is fantastic. We've then got a couple more English people to welcome to our panel who have done fantastic things also in the New Zealand economy. So welcome to New Zealand, even though it's a few years late in welcoming you. Don Allerston has over 25 years on and offshore in the industry, working for companies such as AMP, United Financial Services, AXA and Royal & Sun Alliance. He moved to New Zealand in 2010 and spent 8 years as part of the Astron and Fidelity Life executive teams. He's got a background in marketing, strategy, transformation and customer experience. And finally, Russell Hutchinson, who I'm sure most of you will know, who actually started his career at Sovereign, being the 13th employee of Sovereign, did 10 years there as GM of marketing and started Chatswood Consulting 21 years ago, and is now a guru in the New Zealand financial services, particularly the insurance industry, and somebody that many of us rely on whenever we need to know anything about what's going on in this country. So welcome, everybody. It's an absolute pleasure to have you. I'd just like to start by setting a little bit of the scene of what we want to achieve in this hour, and then I'll leave as much as I can of this time to you, eloquent people who know far more about this than I do. To start with, I'd like to throw the hypothesis out that personal risk insurance exists to support families financially when a breadwinner dies or is unable to work for an extended period due to illness. That's why we're here. Now, almost 10 years ago, the Financial Services Council did a piece of research with Massey University exploring underinsurance in New Zealand. That research seems to be as relevant now as it was 10 years ago. Too many New Zealanders have no insurance or insufficient insurance, particularly lacking, for example, income protection cover. More recently, in 2016, Sovereign did some research with NZIER, which found that new business in the insurance industry was lower than lapses, and the small increase in total industry premium was largely due to contractual premium increases for rate for age and inflation and things like that. So we're suggesting that maybe we're an industry that isn't growing as well as it should be. The FSC has continued to do significant research in this area, and this year, the research has been money in view. The first part of that research that was released around April this year showed that only 38% of New Zealanders have life insurance, or 38% of respondents have life insurance, under 20% have critical illness or trauma, and under 15% have income protection. In the second tranche, it showed that there's a behavioural difference between what respondents think would drive them to seek insurance and what actually does. They think they'll get driven to find insurance when they come into a large sum of money, but the largest actual driver is buying a house at just under a quarter. Interestingly, though, over the last 50 years, Stats New Zealand shows that the average age for buying a first house has increased from 25 years old to 34 years old. In the same time period, the average age of marriage also increased 8 to 9 years, although marriage rates are, of course, falling significantly. And the median age of mothers at the time of birthing children was 25 in 1972 and is 31 in 2018. But it has been stable for the past 15 years. And those stats across Stats New Zealand show that. We had this period between the 70s and probably the turn of the millennium where there was a significant increase in these stats, and it's kind of leveled off over the last 15 or 20 years. Very recently, AIA, and it's great to have Nick on the panel today, have done some research that shows that New Zealanders don't tend to talk about insurance. We know we're not strongly financially literate, and insurance is probably the bottom of the curve when it comes to that literacy. The research commissioned by AIA showed that 2/3 of respondents never conversed with their family about insurance when they were growing up. Over half have never resolved what would happen financially if they were unable to work or died. A third don't even want to think about it. And a third say they don't understand the benefits of insurance. The third tranche of Money in You 3 is going to be coming out shortly. That shows that only 18% of New Zealanders are getting financial advice. A further 20% have had advice in the past. Interestingly, of those that are getting financial advice, over 80% of them say that they found that advice valuable. Those getting advice are far more likely to have different types of insurance cover. For example, about half of the people with advice have critical illness and income protection cover, compared with only under 30% of those that don't have advice. We also find that we're not prepared for those instances where our income is interrupted. If they were unable to work, over a quarter of advised people would have money to last for less than a month. But 4 in 10, 41% of those without advice wouldn't have money to last a month. And if you take it out to 3 months, it's over 60% for both of those groups. We also find that while 44% of respondents to the Money in You research think a financial advisor could help with investments, and 42% think an advisor could help them with their retirement planning, only 17% think that an advisor could help them with their insurance, which is astounding. Of a list of financial services, it ranked 9th in the list of things that people think that an advisor could help them with. And research from the FSC last year showed that there are issues in our insurance industry of high price, complexity, and trust. So in that background, that's what we want to found this discussion today. So I'd like to start with a question for you, Nick. As CEO of our largest insurer, what is it that customers want? And how does that compare to what they actually need? How well do they understand those needs? And are those expectations changing?
Kia ora koutou katoa. And apologies in advance, my voice is a bit husky after a very exciting last 10 minutes in Wellington, which I was really enjoying. It was great to have that to get excited about. But look, just turning to life insurance, and look, I think the really important point here is every customer is different. We have over 500,000 customers at AIA, and each one of them has slightly different needs. And the important part of that conversation is to make sure that they go through and work with an advisor to talk about their specific needs and to understand life insurance and to explain to a consumer what life insurance is and the differences in the products and the fit for them. So as you've pointed out, Mark, life insurance is complex and it does require some time to go through and to understand it, and an advisor is well placed and best placed to be able to do that. But look, I think the really big thing that we need to steer into as an industry is trust. And for consumers to trust us and to consumers to understand that we are here to pay claims when customers need it. And as an industry, we have worked hard and steer into that challenge. I think lastly also through lockdown, we've seen how technology such as this has been a really important part of the future. So for us, how can we help advisors, how can we help consumers have a great experience where they can potentially talk like we are now about life insurance products and have that digital experience in the future is really important to adapt and to evolve and to be part of the future that is in front of us.
Cool, thank you, Nick. Gail, you've been in the industry for a number of years now and you've got experience from overseas as well. How would you reflect on those comments?
I'd firstly like to say hi everyone. No, I agree with Nick. I think good advice, we've seen that advice builds trust and confidence. So I think that's firstly is important. But if I reflect back, I'd like to reflect back on my time in Turkey because I think it's relevant in an opposite way for this market. Turkey is a very low trust market where the regulators regulated everything because they couldn't trust the insurers, and they did that to protect consumers. So, and they go to extreme lengths to do that. So that did not build any trust in the market. And so insurers tended to look for loopholes. So, the opposite, if you like, but like the Berenstain Bears story, the opposite of what you should be doing. But that said, in that market, there was very little innovation, but there was really high penetration on loans and much more digital integration, especially with the bank. And the distribution was king. And everyone and the bank channel dominated. And it was very simple. The transactions are very simple. So an interesting, no trust. But if you look at New Zealand, we're a democracy and it's so different culturally here. We're trying to protect the customer by building the trust and confidence in the industry. And, and the industry wants that. So we're trying to build trust and confidence so we can actually protect more Kiwis. At a macro conversation, I think that all over the world, customers want affordability. They want things to be affordable. They want them simple, and they want predictability. And especially in our industry, that we will deliver on the promise. And it's often a long time, a long commitment of money to the end of that promise. So I think also they're expecting more personalisation and flexibility around themselves. And so, I think that's where we're all moving to. And I think it's important that we actually understand we're on that journey, but really critical, like Nick said, that we actually do build that trust and confidence.
Do you think we have enough access to advice? Is there enough advice in supply in the New Zealand market?
Do I think there is?
Oh, either of you, anyone, yeah.
No, I think that's part of our problem, in that, the advisors are not a growing number. We're not bringing new advisors into the industry, and I think the industry needs to step up to that challenge. We want people to get good quality advice, and the advisor numbers are dwindling and decreasing, and also they tend to operate within their own client base, so they are not selling to many new customers each year. So in a way, I mean, we're getting good quality advice, we need it, but they're working in a very, in a much smaller context. So we've got to find ways to get beyond that.
It'll be very interesting to see how the new regime affects that as well. I remember when I did study the data, I think upon leaving the FMA, we've got 9,500 financial advisors on the FSPR at the moment, and there's actually about 21,000 people who have been on the register at some point in the last 10 years. There's significant turnover in that space. From the people that joined the FSPR, came on the FSPR first thing in about 2010, a huge number of them remain. But those that have come on to the industry since then have tried it, and many of them have dropped back off again. And that will have to change in an environment where they have to be competent before they can enter the market. So
yeah,
it's interesting to see how that changes.
Mark, I think also it would be good in the new licensing regime to maybe get some data from the regulator as to Pacific Island, Māori, European, male, female advisors, age, etc., so that we can start to understand a little bit about the demographic of advisors, and if there are areas which aren't going to represent the population, we can intervene and look at ways that we can encourage and promote those sorts of advisors into the industry.
That's a really interesting comment, Nick. I remember trying to look at those data when I was at the FMA, and age is easy because we've got the dates of birth on the FSPR that we don't publicly have access to, but the FMA do. But when it comes to ethnicity, the only data source we could use would be family name, and going through and trying to guess what people's ethnicities are by that. But I think even that would be valuable research to do. Yeah, I completely agree. You've been in the industry in the UK and New Zealand for a long time, focusing on the customer experience. What would you like to add to the conversation?
Kia ora, everybody. Yeah, look, I think there's some cracking points that have been raised by Gail and Nick, but I think if I would like to start is if you're going to think about customer, then you've got to start with customer. And I think that takes us to specific macro themes, societal themes, the question of ethics and the question of economics. And so while there's been reference to advisors and advice, I think that's true. But I also think we need to look at a broader platform, a broader delivery of solutions for customers, and actually to participate in a conversation where we find customers via channels that suit them. So if I were to look at just some of those considerations, ours is a low interest category serving a low income economy. And I would, first of all, that for me feels as if we have some challenges straight away. For the year ending June 2019, Stats New Zealand suggests that the average household income in New Zealand is $102,000. The average weekly salary median is now $652, and that's decreased by 7.6%, or about $54. Against that, we have insurance premiums that are increasing considerably over the period, 7.3% for insurance premiums. And in fact, in Canterbury and Wellington, those premiums have increased in excess of 15%. That's general insurance, that's building insurance. But when I speak to life insurance, and I'll cite my own example, my renewal has just come through. My renewal increased by just over 13%. Now, I would be described as an advised customer. Yet my reward for that is an increase of 13%. At the same time, CPI is running at 1.5%. So even with age-related increases, 13%, really? And at the end of the day, how do we address this? Because in that context, premiums go up. So if we look at advisors are remunerated using premium as a baseline to that multiplier. Insurers, if they're struggling with new business, claims risk, lapses, they adjust the prices. Guess who's always at the end of that question? So for me, in that context, I think we need to start to elevate the conversation to where I started off: societal influences, what is happening, what are people's preferences, what are our ethical responsibility as a result of that, and economically, what does that dial point to in the context of a progressive future? And let's move away from possibly where we have been.
Thanks, Don. It's really interesting to see that issue of price come up again. And, we're talking price, complexity, trust. Again, those three issues rise. Russell, you've got a really broad view of the industry from your role. How well do you think insurers broadly around New Zealand are delivering to these expectations from customers? How prepared are we for the changes to those expectations?
Yeah, I think there's a couple of things there. One is, how well are we delivering to our existing customers? And generally, we deliver quite well. There are some edge cases, but of course, our main job is to be conservative, And as the Reserve Bank was telling us recently, to be here tomorrow when our customers need us, and to be able to pay those claims, and overwhelmingly those are things that we do, which is great. You just pointed out a gap, of course, which we've been aware of. It's been a common theme at FSC conferences for a while, which is that plainly there's a lot of customers that we don't reach, and we'd really like to be able to reach them, and that is definitely a commentary on us. I like to think that when there's a problem in the relationship between the consumer and the supplier, it's the supplier that's got to step up. So we need to reach out better and do better to make our offer appropriate to those customers. But it's in the second part of your question that I think the key is really, which is in what's changing. And so it's in the big trends that we can see really, where we've got struggles. One of those is that we're in the midst of a trend which has been running for decades, from insuring people mainly when they die to insuring things that happen to them while they're alive, right? And that's a challenge even in ways where we've succeeded. In some cases, we've been perhaps arguably too generous, and income protection products are having some adverse consequences because they pay up perhaps too well for too long, and that's having an effect on incentives. And so we're going to challenge around making new lines profitable, making them understandable, and especially with those living products, making them simpler to apply for, which is a big issue for us. I think we're also in the midst of another long-run trend, which is about consumerism. And when we look at, for instance, the complexity of some of our contracts and the way we work with advised channels and non-advised channels, sometimes in an effort to make a product accessible and convenient, we've also sometimes made it opaque and difficult to understand. And so we need to, that's an important trend for us to plug back into and see, can we do better? And usually there's, at the start of the session, Nick referred to us as operating in a low involvement category, and I think one of the big things that the industry's got in front of it is to build more engagement, especially around those living products, so we've got a better connection to our customer. Things that customers are involved in, they tend to understand quite well, whereas things that they set and forget, then we tend to get problems with those things later on. So it's those kinds of big things. And possibly lastly, I'd say that there's a societal theme, to Don's point about, there's a long running trend towards more complexity, and sometimes even the best, most well-meaning things that we do create complexity. Like when we add LVR speed limits, all of a sudden the mortgage world gets more complex. And so, we need more advice and so on. So there's some great things about these trends, but they're also stretching us and they're forcing us to do things which are new and difficult.
Great, thanks, Russell. Nick, you've got a unique perspective, I think, from the people on the panel here, because you've led both the bank with the bank distribution channel as well as an advice business. How would you reflect on those comments from Russell? Yeah,
look, I think Russell's spot on. I think, whether it was banking or life insurance or any financial product, the thing that's really interesting is the education system, and we need to get in early and teach kids about these products and these services so they understand them. What is life insurance? What is general insurance? And what are financial products more generally? So they can start to understand them and make decisions in their life. So look, I think just to step back and think about what Russell said. First and foremost, there's been a lot of change in our industry. Putting COVID-19 aside, we've had a conduct and culture review, and I think the industry stepped into that, and we've made significant changes to the way that we interact with customers for the better. So, customers can take confidence and make sure that the experience they have is the experience that they believe they should have. And I'm very proud of every insurer and the way that they've stepped into that as well. In terms of the industry moving forward, I think we do need to evolve, and we do need to understand that consumer behaviour is different, and potentially it'll be very different as a result of COVID-19. We know that the online world has been a lifesaver for many people, whether it be supermarkets or just generally shopping and keeping people able to survive in a really difficult time. And I think, when COVID-19 passes, and it will, those trends probably will endure. And so we need to be able to offer our channel partners the ability to be able to market and to be able to provide products the way that consumers want them. And that could be through physical face-to-face advice, or it could be on Zoom, or it could be in a digital forum. It's really up to the consumer to choose. And I think the lesson that we've all learned is that the consumer essentially chooses and decides our future. We need to make sure that we listen to the consumer and that we respond to their needs. And whether it's digital, whether it's physical advice, or whether it's a wellness program, they're all things that consumers will choose us on or not, and we need to listen and make good decisions around that.
Mm-hmm. So yeah, it's interesting that you called out the point around literacy and getting children young, and I was really fortunate to have on the judging panel this morning Kendall Flutie from Banker. And I find it really interesting that what I think is by far the best solution for the education of our children is a small private startup that's now in probably the majority of our primary schools, converting the kids' classrooms to a little classroom economy. And they cover areas of mortgages and investment and foreign general insurance, but they don't have a module for life and health. That's what I have a conversation about the next time I catch up and say, how can we get life and health into that system? Because I think it's a fantastic way that they're teaching our children. Is there anybody else that'd like to step in on that conversation?
Well, it just reminded me of that point that you've made in the research, that there's so little intention to go and seek advice around life insurance, sort of go and deal with it. And yet, in the same piece of research, we found that people that had gone and got advice around their insurance, had very high levels of satisfaction with that. They found that the advice was very, very helpful for them. So, to Don's point earlier, we somehow have to stand where the customer is already, rather than way back over here, which is, at the end of a process. And I've got a strong suspicion that digital is a big part of that.
I agree on digital, but I still think we all know that insurance is a grudge purchase to some extent, and it has to be sold. So there's only a certain level of people are going to wake up in the morning and think, oh, on my list today is I'm going to purchase some life insurance. So, that's the challenge we have. And, there's many moments of truth we've had in this industry. And I learnt some facts recently about people that were killed in the mosque killing. Like many of them had mortgages. Very, very few of them had them protected. So families are out. So that's where we've got to get to, because that's the time when people, are going to consider it. So we have to raise awareness, as you say, the literacy and the need for it. And I know from research that we've done previously, people have a perception that it's expensive without any idea of what that means. That, it's expensive. Well, actually, $400,000 of life cover on a 30-year-old isn't expensive at all. So it's all that demystification as well. But I do agree that we're going to have to broaden our distribution footprint. But it's not singular, they all help each other.
Oh, absolutely.
Yeah.
That you pulled out, Russell, I find it also very interesting that although they say 80% of people that had advice were very satisfied with it, fewer than 20% of people had advice. 20% of people had advice in the past. Did they not understand that it should be a continuing conversation? So their advice experience was fantastic, but they don't get advice anymore because it's one and done, and I don't need advice anymore. I thought that was a really interesting connection in those data points as well. I think we've got to bring Clare into this conversation because she's a key party in our industry, and many of us haven't had the opportunity to get to know Clare. So I'd like to ask Clare a specific question if I can. Just before I do, we have got on your viewing platform on the right-hand side, there's a button to ask a question. So you can at any time push that button and type away with a question, and it'll come through to us. I'm very quietly trying to watch my phone to see whether any questions come in. And if that button's currently grey on your screen, just refresh your screen, rejoin this panel, and it'll appear blue so that you can push the button. Now, a question for Clare, that you're leading the FMA's regulation of the insurance sector. What do you expect from insurers regarding doing the right thing for the customer? And how will you approach regulating the industry?
Well, kia ora. Thank you very much, Mark, for bringing me in there. So in terms of what the FMA expects from insurers, I think we've been quite clear over recent years. We've had, as Nick alluded to, the culture and conduct review, and we also have our good conduct guide. But to sum up some of those elements, I guess, you know, doing the basics well is a really important starting point. Because what we quite often find is not that there is an intent to drive poor customer outcomes from firms, but actually quite often the systems or the processes aren't there to achieve them. So if you're thinking about launching a new product, we've talked a lot about product simplification, for example, or digitization, which we see accelerating as a result of COVID and other drivers and in the macro space. You know, you've got to have the systems behind that to make sure that the customer outcomes that you expected are actually achieved through the process. So I think getting the basics right and then really embedding not just necessarily a compliance plan around that, but embedding a culture that is more customer centric is what we expect to see. So more focus on the end customer, not just on the distribution channel. We're seeing initial commissions at the moment at an all-time high. And you have to ask yourself, who's benefiting from that? So, you know, I think there is a question around whether it's around the cost of the product or whether it's around how the system itself works together. But what I'd really like to see is conduct risk management elevated to the same level of financial risk management. You know, this is an industry that is all about financial risk management at the end of the day, as we started off with. And that's from a customer point of view. It's their financial risk that we're managing. As an industry. So what I'd really like to see is that the customer is put at the centre of in terms of conduct risk management as well. But you also asked me how we will look to approach regulation, because of course we only look at a very small slice of the industry at the moment through our QFE licensing approach. And the government is looking to bring in legislation so that we can see across conduct in the insurance space. And I would say our approach is going to evolve with that regulation, but you're not going to see a dramatic change from what you see today in our approach. So the conduct and culture review that we did and the conclusions we reached and the recommendations we made to the industry, that is what you will be seeing in the future. There's not going to be a dramatic shift from us. The basics from our perspective are already there. We will look to hold the industry to the standards we expect of them. But we do want to focus on more than just compliance with the rules and the regulations. Ultimately, I think that's about us working together. It's about looking at some of these challenges that have been highlighted by other panelists here and saying, well, how can we collectively find solutions to that? And I personally think that the regulator is part of that as much as the industry is part of that. Customer understanding, we've mentioned a number of times already, and I think that's a really important part of demystifying, as Gail said, the kind of complexity of some of the products here and helping people to understand what the value of the products is and how that can be achieved for them. Certainly we saw during COVID, for example, that people did not understand what type of insurance they had. When we had calls with a number of members of the industry, some of which are on the panel today, you know, what they were being told by their customer service teams was that people were ringing up to ask, well, what actually am I covered for at this point? Which means that they didn't really know what it was in the first place. And we saw that there were different terms being used across the industry for different types of relief that could be provided. That doesn't help with customer understanding. So I think that there's an opportunity for us to come together to think about what are some of these issues that we can tackle together. And that will help us actually achieve good outcomes for customers in the future.
Thank you, Clare. I certainly appreciated in my time working with the FSC, the involvement that the FMA has had through our conversations. And I think the topics that you've discussed there, getting closer with those conversations with the FSC, I think will certainly help. Don, as an experienced executive who now has the luxury of looking inside from the outside and poking a pointy stick, what do you think the insurers need to do to meet the expectations of the FMA and the expectations of the customer?
Yeah, look, it's I was listening to Claire's commentary there with particular interest. Obviously, our accents give it away. We're from from the same country. And I joined the industry back in the 90s, when at that point, you could be a milkman on a Friday, you could be a financial advisor on a Monday. And then what followed is a suite of scandals to do with, endowments, pensions, etc. And I can understand where Clare is coming from in the context of her narrative. And indeed, through my own education, you have to start to speak to what does that mean regarding delivering a sustainable, responsive and relevant industry moving forward. And I think for me, that's the lens through which we have to look at that challenge. I also think we need to maybe step away from potentially our positions regarding the role of regulation. In some quarters, we might need to kind of agitate around this notion of costs crowding out resource for innovation and for progressive customer agendas. I say that because that's something which came up again back in the UK as an excuse not to do something. It was a pointing the finger kind of attitude, which I don't think we can tolerate in a progressive environment that we have here, such as New Zealand. But if we are to meet those challenges, I would also maybe look at saturation, if I could describe that, in the New Zealand market. So just prior to coming on, I just took a look actually at Russell's Chatswood website, and I went to the column which spoke to medical insurers and life insurers, and I counted 17. Now, if I were to tell you that there are something like 2.3 million people between the ages of 25 and 65 here in New Zealand, then straight away, my brain starts to join the dots at a systems level when we start to talk about oversupply. What does that truly mean in the context of cost? And whilst New Zealand's spirit is very much one of entrepreneurial kind of number 8 wire, and businesses have done so well, I question 17 serving an island nation such as ours. The answer is not 2, but I don't believe it's 17 either. Now, I know that's provocative and I don't want to scare anybody in that context, but I do believe we're moving into a future where we need to step away from sunset strategies which keep us where we are right now into space where actually we can start to think about progressive mindsets that exist with our customers or the customers we aspire to serve. Because if we don't, there'll be partnerships, there'll be industries, non-traditional competitors that will step into that space. And before we know it, we'll be asking who's moved the cheese. So we can look at the likes of Google, we can look at Facebook, we can look at Amazon, all of whom are actually making moves into the risk space. In fact, you've got the position Amazon securing a license in India, and they're already distributing insurance-based products in India. So where once capital, etc., were barriers for entry, now we have such companies who have already access to distribution. And I wonder what those trust barometers look like dealing with your Amazons, etc., compared to possibly where trust has sat historically for customers dealing with insurers. So there are a number of things there that I possibly have thrown at you, Mark, as maybe a complex way of answering that question. But I do believe at a systems level, those things are connected, and we need to think a little more broadly and set strategies 10 years downstream, which allow us to face into those and be responsible for the customers that we serve now, as well as those segments of society that we do not want to abandon, that we wish to serve. So I guess that's my response.
Thank you, John. I can reach across and give both Nick and Gail a pat on the back because they're both involved in this reduction of that large number of insurers that you talked about through recent amalgamations. So that's really great. Thanks for your efforts in those areas, Nick and Gail. Russell, have you got anything to add to that?
Yeah, look, I just want to tell a quick story and to kind of bring it back to a sort of an example. I really like what Claire said about focus on the basics, and plainly, there are some issues that we've got. We tend to think a policy document can solve all problems, and most customers don't really read them. It's really difficult. They just trust that we're going to do the right thing in there, and so we need to operate in a manner which reflects that trust. Especially. Sometimes when I hear the regulators talk about doing the basics, I think, wow, it's not really that hard to meet the regulators' expectations. The much harder bit of territory is to really meet the customer expectations, especially when it comes to digital. Extending Don's comments and Nick's about the compelling event of COVID, I got a friend who's an insurance advisor, and he had never done, client consultations virtually and all of that kind of thing, but he had a big stack of leads from an event that he'd run just before the lockdown. And he went, okay, we'll give it a try. And they got on Zoom and they ran their client meetings that way. They then started working up things like, job forms and roofing forms and sending them to clients and getting them to pre-fill things like their fact finds and their needs analysis. And then they started connecting that up to their CRM. And before you know it, they had a whole new business. And they will never go back to how they did it before. And I was really excited by that. It's a great, compelling event, and it showed things changing, and you could see it affecting their costs, driving them down, making them so much more efficient. And we thought, there's something in there. That's some of the direction we need to go. But in terms of other experiences, I'm online all the time. And because I look at life insurance all the time, I get loads of ads. And an awful lot of the direct digital stuff feels confusing and difficult for consumers to connect with. It's hard for them to look at one of those events in their lives, like, Gail was talking about, like getting a mortgage, you go, oh, I need this. So they don't seem to be sort of really well connected to exactly what those kinds of event drivers might be. Certainly not in the way that most people understand, oh, if I bought a car, I better go and get it insured, which is kind of how, as straightforward as it kind of needs to be for them to make it work. So.
Yeah, great. Thanks, Russell. We've spoken a lot so far about customer expectations and changing customer expectations. Now, as an insurer, we're rather large businesses. We've got a lot of moving parts. What challenges do we have to meeting those expectations? Gail, can I fire this one to you first?
Yes, thanks very much. Firstly, in terms of what Clare said, I think I'd like to say first that we're both the industry and the regulator are aligned around ensuring that New Zealanders can access a robust, financial services market, and one with high consumer confidence. I mean, that's not in doubt. But there has been some challenges, and there are challenges, and I think we're honest. We've got to manage the cost of compliance. We've got to make sure that it's not too onerous and that it doesn't impact on prices. I think we've done a good job on that so far. I think the one is the pace of change. That has to be more manageable because it can create unintended consequences. So I think that certainly has been something that I've observed. It's been, it has affected some of our advisors adversely. But nevertheless, I mean, we slow it down and might not have changed too much. We do need, as an industry, to be better at data and insights. We tend to live on, old legacy systems, and especially, Nick will probably know this like I do, when you do acquire another company, you end up with more systems. And so we need to get better at that, at actually getting, so we can actually really deliver on the expectations. We've got to keep pace with changing needs and, changing demographics. We're talking about plain English policies, but we're not talking about plain Chinese or Mandarin or Te Reo Maori or any of those things. And, so I'm saying we've got to keep pace with the future, and we've got to keep it really future relevant. So we've got a job to do, but as Nick said, we've stepped off really well. And I think, we're on a journey, but it's not, it's not going to be finite. We're going to have to keep going, continuous improvements.
Absolutely. Nick, is there anything you'd like to add to that?
Well, firstly, Mark, we're done on the acquisition trail, so be reassured. I think we're 24 companies in all, so trust me, we're going to focus on what we have and what we do, and that's wonderful. And equally, just reinforcing what Gail's talked about, political and regulatory stability is really important, and it's one of the reasons that AIA invested in New Zealand. And is one of the really strong points about Australia and New Zealand as countries, which give people confidence. And I think moving into the next 12 months, we've got a changing regulatory environment, and that's fantastic. We'll have real clarity for consumers about what advice is. We'll have consistency in what advice is, and that's a great step forward. So people can go to any advisor and feel comfortable that they'll get a very consistent service. We do have some economic challenges. What they will be is anybody's guess. Interest rates clearly are things which create challenges for insurers, but we worked very closely on that, and obviously the Reserve Bank have been very active, as well as the FMA, just in making sure that the industry is robust and strong and able to stand, whether it's economic or medical challenges in the future. So look, I'm optimistic. I think there's some great things that have come out of a really, really awful time. Technology is better than it ever has been. Advisors can actually give advice with customers remotely with our e-app and use Zoom, which, you know, even in a non-COVID world, anybody that lives in Auckland and commutes in the traffic, particularly with the Harbour Bridge that was falling apart, realises that actually we need to be a little bit more productive and use tools that we're using today.
Absolutely agree. I found my experience during lockdown being able to move from 3, maybe 4 appointments in a day to 7 with no problem. So we can certainly expect to see, I think, a lot of increased capacity from advisors. The conversations that I have tend to suggest they have a better time face-to-face for that first appointment where they're establishing rapport. The follow-up appointments using Zoom is very, very efficient. We're starting to get some questions from the floor, which is fantastic. And I'm going to fire the first one of these to Clare. The FMA as a regulator has been very active over the last 10 years, since its inception, in investor education. And the Commission for Financial Capability as well is very focused on investor education. Is it going to step in at any point to educating New Zealanders about insurance? And here I would say particularly life and health, because as Russell mentioned before, you buy a car, you get insurance, but we don't wake up one day and go, oh, I need to get my income protected. So is there anything that the FMA is planning to do to step into this space to help with the literacy of Kiwis?
Yeah, it's definitely something that's under consideration for us at the moment. I think probably you won't see us being incredibly active in the insurance education space until we have a mandate from the government to do so, because frankly, we do need the resources in order to develop our capability in that area. It's not one that we have at the moment. We are very much an investor focused in terms of our capability at the moment, but it's something that we'd like to expand into as we expect to have more responsibilities in both the insurance space and in the banking space as well. I think it's fair to say that we will be one of a partner of regulatory organisations, as we are at the moment. So what we'll be thinking about as we move towards the new regime is, what is our role amongst that piece? What is our role in terms of working with the Retirement Commissioner, for example, on insurance? And what other agencies are there out there that we can actually work together with on this piece? Certainly, we are doing a lot of work through the Council of Financial Regulators at the moment, and we are trying to take a more systems view. And to Gail's point, we appreciate that compliance comes at a cost, and that the pace of change for the industry, but also for customers, is important to consider about bringing that in a sensible and proportionate way. And so what we need to do is to make sure that we are trying as far as possible to act, within the system, and really leverage the capabilities we've got across New Zealand. So it's definitely a core piece of our planning work as the new regime comes in. Yeah.
Clare, I wanted to just chip in and ask, do you think that the education mandate really lives with the FMA, or does it live perhaps with the Commission for Financial Capability, or one of the other regulators or departments?
So I think certainly that we all have a role to play. It certainly doesn't sit solely with us, which is why I say that it's important that we work with the other agencies, such as the Commission for Financial Education on that. And I think certainly in terms of the steps that we've taken so far in investor education and capability, we will be looking to have that conversation and think about what is our role in that space. As I said, we have been taking some very small tentative steps so far, just in terms of putting out the odd media piece, which is more consumer facing, on insurance, and certainly during COVID, what sort of questions people should think about asking their advisor, what sort of questions they should think about asking their insurance provider. That's the kind of thing that you should probably expect to see from us at a fairly low level until the regime comes into place. But this is an evolving picture. You know, as the FMA, we do need to think quite carefully over the next really year or so as our responsibilities expand as to what our place is within the system, and also how we can, as I said, develop our own capability, because it's not one that we've got at the moment with the focus that we have on investors.
Russell, I think it would be great for the Ministry of Education to integrate into something like economics, some sound, practical, financial information on, KiwiSaver and general insurance and life insurance. So I know there is a degree of that, but actually, really New Zealand Inc. relevant information that helps young kids coming out have some degree of understanding when they get into the real world. Maybe in KiwiSaver, for example, they get a part-time job and all of a sudden they're in KiwiSaver till they're 65. Those sorts of things. It's really just giving some basic information, starting their learning journey in a consistent way, so they're better able to cope with the bends and the twists in the road of life through getting into the products and services we offer.
Really hard to tell your children when they're growing up what it is you do as a job, isn't it? That's a massive test.
There are a lot of things that it would be great to see other parties step in to do this, and you've given some great examples. The Commission for Financial Capability themselves have also been very heavily focused on investor education. Mm-hmm. If none of that were to happen, what is there that we as an industry should or could do to step into the space to take charge of it ourselves?
I think the FSC is well positioned, to provide a consistent voice and information, and we could easily put together a program of work to help the ministry and the education framework to provide, a 101 of what we do.
Mm-hmm.
Yeah, I think it.
Like to step in?
Sorry, I think it comes from a variety of places. Sorted obviously is a great resource. I think also carefully designed regulatory regimes needed. I know that in the UK, a lot of kind of information that was provided, sort of general knowledge information that was provided by financial advisors, tended not to appear, and then there was the Money Advice Service to kind of step in and fill that gap, and it would be. It takes a lot of inputs, whether it's schools or Sorted or, us as an industry and advisors doing that too. But I wouldn't like to silence any of those voices. I think they're all going to be really important.
Thank you. Just want to pull it out to another topic. We've talked quite a lot already about the complexity of the products and to trust. Another one of the challenges that came out in the research last year was around price. The suggestion that prices in insurance are too high. We've also had the suggestion from Clare that we've got high levels of commission in this country and the highest levels ever. Are there any thoughts that we have from the industry around the price of the products? Who would like to tackle that one first?
I'll give it a go to start with, then I'll go first, then Nick will get the hard part. We aren't a scale market like in other places. So that's the first point I'd like to make. We're much smaller in OECD size, so we don't get the same scale. And as you say, we've got 17 of us. So, there is that just natural cost. Is the cost of distribution too high? That's the open-ended question at the moment. But when we're not reaching New Zealanders and we've got an underinsurance issue, it's sort of a hard challenge, because if you start thinking about hitting that channel hard, does that mean that we're going to have less, or are they going to suddenly raise their productivity to earn the same amount of money? So it's difficult. But the first point is price is around the scale and size of the New Zealand market. The other issue for us, and it's you raised this earlier, Don, you got a surprise when you got your 13% price increase, is that this market is very unique in that it sells yearly renewable term, and the other markets sell level. So the price is predictable from the beginning. And we got into this market somehow because we're short-term thinkers. Yearly renewable term has a naturally lower price than a level term product. So you can, it's easier, it's more affordable, but then we just have those pain points. We transfer the pain points to the future. So that's why price becomes so much more relevant to the consumer, because they're getting annual increases at the time when they need the insurance even more. So, I mean, that's the first point I'd make on price. I don't know what you think, Nick.
Yeah, look, I think you sit down with a financial advisor and you know, price relative to what? And you need to go through an advice process to understand your risk profile. And if you don't have it, as we all know, and you have, you know, a large mortgage and you don't have ability to pay it, then it becomes quite cheap relative to the situation you're in. So I think, you know, again, good financial advice enables people to understand the value of it, because price is all about value. But in saying that, there are options that, you know, we need to explore as an industry. You know, to the point you raised about rate for age, you know, the products we sell in New Zealand, again, are pretty unique in the Southern Hemisphere. If you go into Asia, you're more likely to find cancer care, critical care, cardiovascular care type products, which are, you know, sort of narrow in benefit, but priced, you know, accordingly because of the, you know, economic situation there. So I think there is an opportunity to look at products, you know, we would have called it in the old days riders, where, you know, you can select a range of benefits that suit you, and that's really clear, and we can price for that. You know, we have been and do obviously price to make sure that we are competitive, and equally we put a lot of benefits in our product so that consumers have, you know, parity when they go and make a decision about the products, and that we are, you know, as close as we can be, allowing for competitive advantage in what we do. So I think there's a range of things that we can do in the future, and they're all things that are on the table, particularly as we potentially go into an economic downturn where the disposable income of a family may be you know, harder hit.
I mean, automation also, investment in that, which is inevitable in our industry, is also going to help bring down costs.
Yes, bringing some of the cost out of the industry. It's interesting that we talk as well about scale in this country, because, as you know, as much as we talked before about the number of insurers in our small market, we do have a history in this country of you know, number 8 wire of innovation and small companies coming in and you know, setting the market off. So you know, may not be that we have too many insurers in the market, particularly once those technological advantages and the cost efficiencies start coming through. So we might see some more insurers into this market and do a good job. It'll be interesting to see over the next few years. And on that point, I would like to finish with my closing question, because we are going to run low on time. So the last question for everybody is, how do you see customer expectations in the industry delivering to those expectations in 5 years' time? I'm going to ask Claire this one last, start with Gail, and then go through the gentlemen. So Gail, can you tell us, how do you see the customer expectations in the industry delivering to those expectations in 5 years' time?
Okay, well, I think across all industries at the moment, the expectations of customers is increasing, is continuing to increase. And I do think people are increasingly time poor, and there is definitely a digital first mindset. I mean, we all saw that in COVID, that we actually could do that, and it's convenience. But we know also the value of advice. So I think, if I look out in 5 years' time, I think we're going to have to be offering streamlined, personalised service. When we'll get that, if we get access to data, that'll bring our costs down. But we're also going to have to enable customers to engage with us in the way they want to and when they want to. And definitely, to Russell's point earlier, physical and digital channels will be integrated, and they need to be. And I think that will help a lot with protecting more people. And, you know, the key in the end is affordability, simplicity, and predictability. Customers have to get what they understand, and we have to deliver on that promise. And that's also to price. You know, we can't keep putting through big price increases over time.
Absolutely, great. And on the 3 points that we talked about around trust, price, and complexity, you talk about affordability and simplicity. You know, the antithesis of those 2 points. So it's really, really good points to raise. Nick?
Look, I think when I look into the future, you know, I look at so many exciting things happening. You know, Apple are about to release their Apple Watch 6 that measures oxygen saturation, which is, you know, again, another really great tool. My watch gives me an ECG if I want to do that, and there's all that information is something which, insurers and whether health or life insurers can start to harness and to provide potentially customers information and insights as to their health and well-being, and give them advice as to how they can improve their health. So I think the consumer wants to have a relationship with us, and at the moment there can be an annual increase, as Don's alluded to, which isn't the most pleasant experience that you'd get, or when they claim. And so I think to have a daily experience for me, and I know this is selfless marketing, but I do look at my app every day. I'm a gold member in Vitality. I'm super proud of that, and I use my active benefits. And so for me, I do have a daily relationship with my insurer, and so I feel engaged.
Yeah, great. Thanks, Nick. Don?
Yeah, look, I'd like to point to some of the things that Nick raised, actually, and I think he's got a really good point. If you think about diversity that we have here in New Zealand and a building diversity, apparently Auckland, for instance, boasts over 100 ethnicities and over 150 languages are spoken every day. Now, that's huge. If I go back to the point that Nick raised, that lends itself to different thinking and product structures and solutions from different territories that maybe new modern Kiwis have migrated from and bring with an expectation, and yet that expectation is falling short. That allows us to kind of point towards innovation and real value in the context of the product offer. The last thing I would say, I'm conscious of time, is I would really love to see the industry move from a systems, procedures perspective, how do we do things right here, up to interactions and touch points and experience, and reverse that. And how you engineer your business from thinking the other way around. There is a delta between where the industry is right now to where it needs to serve. But just the same, if we are to deliver a sustainable industry, one we can all be proud of, that feels to me a cornerstone that we need to build on.
Thank you, Don. Russell?
Yeah, I would say these things, hearing all these things being talked about, digital, diversity, increasing engagement, digital, whatever channel it is, so digital in advisor, digital in bank, digital in direct, and so on. These are all great. And the wonderful thing about hearing some talking about these things is that these are very customer-focused priorities for us to have. And yeah, I really look forward to, the events that we've had over the last year, pretty hard to cope with, but it's pushed us into having to do a lot of things which are going to transform our industry. And I'm a relentless optimist for this industry. So, good things.
Good on you.
Thank you, Russell. And Clare, I don't give you the last word because you're the regulator. I give you the last word because you're the newest Kiwi. So as the newest Kiwi on the panel, what would you like to add?
Thank you. So I guess just picking up on a couple of those points, from a sustainability perspective, I'd say culture and conduct, this is not the flavour of the month at the moment. This is still going to be around in 5 years' time. And if the insurance industry is going to build that customer confidence, our belief is that it is going to be through that. And you can only have a sustainable business if you are going to build the confidence in the system. And we are a part of that. To pick up on Gail's point as well, engagement, really important. Far too often we don't see follow-up post-sales, people not being contacted. It's that set and forget that Russell was talking about at the beginning. So I think, that's another point that we really like to see in 5 years' time, of more of that engagement, whether it's through digital channels or it's through other methods that people might prefer to the digital as well. And then finally, again, to pick up a point of Gail's, the product's got to do what it says on the tin, and people have got to understand what they've got. And I think if we get to a point where in 5 years' time, we've got more standardization of terms, we've got products that people can understand, and they function in the way that people will expect, we're going to be building that trust that we need to see.
There are certainly some very interesting issues tied up in those statements as well, and I'm sure we could go on for another hour at least. And I, for one, have gotten a great deal from this conversation. As I say, it's been very humbling to facilitate this panel. So thank you all very much for being a part of this. It's been a wonderful experience for me, not the least. I'm sure it has for the audience as well, but it's all about me at the end of the day. So I hope you've enjoyed it as much as I have. And again, I appreciate it very much. Those who are watching in the ether, I hope you've gotten a lot from this conversation as well, and it gets you thinking, because after all, that's the key purpose of this conference, is to get us connecting and to get us thinking about how we can make this industry better for New Zealanders. So thank you very much, everyone. Have a great afternoon, and look forward to seeing you all tomorrow.
Fantastic. It is such a pleasure to have such leading discussions from across the sector on our platforms. Thank you to all of this afternoon's and indeed all of today's speakers. Great content drives great conferences, and superb content is something we're not short of here. All of today's sessions have been recorded and are available to all registrants to watch again in your own time. If you haven't yet had a chance to look at the sponsor and Tech Alley areas, I would thoroughly recommend it. There are all sorts of downloadable resources and contacts available to you as the audience. We hope you've had a wonderful day so far and that you're able to relax this afternoon, ready for another day packed to the gunnels with great content tomorrow. For those of you who have tickets for tomorrow, we will see you back here bright and early at 8 a.m. for the breakfast breakout sessions. Bring your Weet-Bix or your Vogels with avocado. The dress code includes pyjamas. That's one of the benefits of a digital event. Once again, if you have any questions about the event, please email events@fsc.org.nz and the events team will be in touch. I'm Vanya Thomas from Guardian Trust and I've been your MC for day one. It has been a pleasure being with you all today, whether you're in your office, in your home study or on the school run. Thank you to the team here in the studio and have a very pleasant evening. E no hora.